Hi clients and friends, Mike Brady here for the third quarter review, the fourth quarter preview. If you go back 3 months, watch my video, you're gonna see that the third quarter I said was gonna be up, and it was up. And I don't say that so much to pat myself on the back. As a matter of fact, one thing that I've learned in 19 years is that humility. I might be right this quarter, but I might be wrong the next quarter. So the question is, if you're wrong, how wrong are you going to be and how exposed are you? That's a theme that you have gotten from me over and over again. And I'm not here to celebrate and say, oh, I'm the smartest guy in the world, but for this quarter, I did call it right on. The third quarter was great for the Dow Jones, for the S&P, for all the stock market indexes. It was up 10.27% on the Dow, which brings it up to about 3.5% year to date, because it was way negative as of June 30th. And then positive 10.72% for the S&P, which was also way negative as of June 30th. So now it brings it up to, in positive territory for the year, 2.3%. So that's kind of what's happened so far. Now let's jump right into what's going to happen. Oh, by the way, before I say September, incredibly good month for the S&P. It was the best one in 71 years. So just really kind of something to best September in 71 years. So just to kind of tell you how strong. July was good, August was not so good, and then September just kind of came roaring back, which kind of leads me into my fourth quarter preview, which is kind of the meat of this video, which is I do believe that the market's going to be up again, flat to up. I think it's going to continue, and I think we're going to end the year in positive territory. One of the reasons why I felt that the third quarter was going to be positive is it just seemed oversold at the end of June. It is not overbought as we're talking here today. The trend is probably going to continue. I think the VIX is going to increase, which is the volatility index, in October leading up to November. This is earnings season, and as we've got earnings season, plus we've got the election first part of November, it's going to increase our volatility, but I do believe that November and December are going to continue to go up, and it's going to end the year positive. I have one of the things that you really have to keep in mind is what's your allocation as a portfolio. You don't want to get overexposed. So I've got kind of my most aggressive clients, no more than about 50-55% in a stock or stock mutual funds. One of the things to watch out for when you do your retirement analysis is most people need a certain rate of return so that they have enough money to retire, or if they're retired already, that they don't outlive their money. And so that rate of return is typically greater than what you can get in just a T-bill or the money market or the mattress. And so you do have to take some kind of risk. Even when you're in retirement, most of the time, for most people, you do need to have some kind of equity exposure. And that equity exposure probably shouldn't be any less than 10 to 15% on the way low side. So I'm kind of giving a range here, quite large, 10 to 15%, all the way up to 50-55%. But of course, it's individualized for you. I do believe that you need to ensure that if I'm wrong for the fourth quarter, which I don't know what the future holds. I'm just giving probabilities here, and I do believe the probability is going to be up. That you're not exposed, and you can live if with yourself. You can sleep well at night if, in case I'm wrong and you're wrong for the fourth quarter. Of course, I'm handling this on my client's behalf, and as I'm doing my end of the quarter reviews with my clients in person, of course, my in-person fourth quarter reviews as well. I think that I'm going to go shorter and shorter on the bond durations. I do have some bond mutual funds and clients' portfolios, and I think that's probably a fine thing to do, but the duration has to be shorter and shorter and shorter. One of the big things, discussions for this fourth quarter is also going to be quantitative easing, which basically is inflation, pumping more money into the system, by buying back their debt. And I happen to be of the argument that it's not going to cause huge inflation, that the bank's going to hold on to it again. We have commercial real estate debacle still in front of us. Commercial real estate has already declined. I think that it still has to accelerate. I think that's going to be one of the big collapses still before us, and I continue to be concerned about municipal bonds and municipalities in general. And so that is probably going to lead to higher taxes, which is a bad thing, in my opinion, in our particular situation. But that's just kind of what I see in the midterm horizon for all of us. Anyway, I hope I've given you what I'm thinking about, and you are always welcome to give me a call. Mike Brady, my company is Generosity Wealth Management, 303-747-6455. I'm a registered rep with QA3 Financial. You have a wonderful week, wonderful quarter. Please give me a call. I love hearing from you. Talk later. Bye-bye.